They don't care about the relationship between real interest rates and the price of gold. They don't care about the strong dollar. They don't care about any of this stuff. They don't care about these correlations, right? They just...
Have you ever thought about what it would feel like to witness a financial phenomenon? What if I told you that the seemingly modest silver could ignite, skyrocketing to over $500 per ounce? Today, we're uncovering the incredible forecast made by veteran market strategist David Hunter, who predicts a massive financial melt-up, sending the price of silver soaring to heights many might deem impossible. Is this mere speculation, or is there a profound truth waiting to be discovered? Keep watching as we delve deep into the mechanisms that could drive silver into a new era of value. Let's start with a snapshot of the silver market as it stands today. Currently hovering around $28 per ounce, silver is testing significant resistance levels. Analysts have their eyes glued to the $28.50 mark, a critical threshold that, if broken, could signal a new era for silver bulls. But why is this level so crucial? It represents a battleground of supply and demand, where a surge of sell orders has traditionally capped gains. Overcoming this barrier could unleash silver's potential, propelling it towards David Hunter's ambitious $500 target. But the path isn't clear yet. With the market being overstretched and the relative strength index pushing above 70, a pullback isn't just possible, it's probable. Understanding these dynamics is key as we explore the potential for a silver melt-up. Stay tuned as we uncover the driving forces behind the market's movements and how savvy investors might capitalize on these trends. As we look closer at the factors influencing silver prices, it's crucial to understand the broader economic environment and specific triggers that could drive silver higher. Geopolitical tensions and economic data releases play significant roles. For instance, recent U.S. inflation data has shown unexpected increases, reinforcing the Fed's higher for longer interest rate stance. This might sound like bad news for precious metals, but silver has demonstrated resilience, recouping losses quickly and maintaining levels near daily opens despite a strengthening U.S. dollar. But there's more beneath the surface. Silver's dual role as both a precious and industrial metal positions it uniquely in the market. With the ongoing push towards green technologies, silver's demand in industrial applications is surging. Any shifts in central bank policies, especially potential rate cuts later this year, could further enhance silver's appeal as a hedge against inflation and a key player in technological advancements. Moreover, technical analysis suggests a bullish trend if silver can consistently close above $28.53, with the next psychological resistance at the $30 mark. But what happens if it breaks that? We're venturing into a territory where the combination of investment and industrial demand could push it to levels forecasted by David Hunter. Let's keep our eyes on these indicators as they will significantly impact how we approach silver as an investment. Now focusing on David Hunter's intriguing insights. With over 5 decades of experience, Hunter isn't just another voice in the financial wilderness. He's a seasoned strategist who sees beyond the immediate market fluctuations. He predicts not just a rise, but a meteoric surge in silver prices, all part of a broader melt-up scenario he envisages for the markets at large. But why silver? And why now? According to Hunter, the conditions are ripe. He sees a global bust on the horizon, a downturn worse than a recession, but not as prolonged as a depression. In this scenario, precious metals like silver could become safe havens, despite initial dips. But there's more. Hunter points out that the eventual recovery from this bust, fueled by unprecedented monetary easing and fiscal stimuli, could lead to a supercycle in commodities, with silver taking a front seat due to its industrial applications and monetary characteristics. Hunter's confidence in silver breaking the $500 mark stems from a combination of a weakening dollar and an increase in demand for green technologies, where silver is key. The expected dollar decline and the potential for inflationary pressures could make silver an attractive asset for both investors and industrial sectors. It's a bold claim, considering silver's current price levels, but Hunter's track record suggests his predictions are not to be taken lightly. Let's unpack more about how these macroeconomic factors could align to make such a scenario possible. As we delve into the comparative analysis of silver against other precious metals, it's crucial to understand the distinct roles these assets played in both the investment world and broader economic sectors. Gold is often seen as the go-to safe haven during times of economic uncertainty, typically outperforming during market downturns due to its status as a pure monetary asset. However, silver, often dubbed the poor man's gold, offers a compelling narrative of its own, especially now. Silver straddles the line between a precious metal and an industrial component, making it doubly significant in the current economic landscape. Its industrial demand is tied closely to advancements in technologies, particularly in areas such as solar panels and electronics, which are critical components of the green technology movement. This dual appeal can lead to more pronounced price movements, both upward and downward. Moreover, the current global push towards renewable energy and sustainable practices boosts demand for silver, giving it an edge that gold does not possess. The price of silver, therefore, is not only influenced by investor sentiment and macroeconomic instability, but also by significant industrial demand, which is expected to grow as the world leans more towards renewable resources. In terms of technical and market analysis, while gold has shown strong performance, silver has yet to break past its historical highs, providing a potentially undervalued opportunity for investors looking for growth as well as safety. The question now is, can silver catch up to and possibly outperform gold in the coming economic cycles, especially if David Hunter's predictions come to fruition? This unique positioning of silver makes it a fascinating subject for investors, offering both stability and speculative opportunity. Understanding the economic backdrop is crucial when analyzing any commodity, especially silver. Currently, key economic indicators such as inflation rates, central bank policies, and geopolitical events play a pivotal role in shaping market expectations and, subsequently, the price of silver. Inflation has been persistently high in recent times, much above the Federal Reserve's target rate. These elevated levels have tempered expectations for monetary easing. Traditionally, higher inflation should bolster the appeal of silver as a hedge against the declining value of fiat currencies. However, the Fed's higher-for-longer interest rate stance poses a complex challenge, creating an environment where the U.S. dollar remains strong, which generally pressures precious metal prices downward. Yet, silver has shown resilience. Following significant economic announcements, such as the U.S. Consumer Price Index (CPI) data releases, silver has demonstrated a capacity to recover losses swiftly, suggesting a robust underlying demand that could be a harbinger of higher prices. Furthermore, if the anticipated rate cuts by central banks materialize later this year, we could see a weakening of the dollar, which would likely provide a lift to silver prices. Also, consider the broader macroeconomic scenario where central banks globally might start to cut rates in response to slowing economic growth. This potential shift could decrease the relative strength of the dollar and increase the attractiveness of non-yielding assets like silver, especially when coupled with its industrial demand in burgeoning sectors like green technologies. In sum, these economic indicators not only help us gauge the current state of the market, but also allow us to forecast potential movements in silver prices. Staying attuned to these signals will be essential for anyone looking to understand or invest in silver in the coming months. Investing in silver presents a unique blend of opportunities and challenges. While the potential for significant gains exists, especially if David Hunter's predictions come to fruition, it's essential to recognize the inherent risks associated with such investments. First, the volatility of silver cannot be understated. Its price is influenced by a complex interplay of factors including investor sentiment, industrial demand, and macroeconomic variables. This volatility can result in substantial price swings, which, while offering the chance for high returns, also pose a significant risk of losses. Moreover, the current market conditions suggest that silver is at a critical juncture. It is battling resistance levels that, if broken, could pave the way for a substantial rally. However, the market is also described as overstretched and overbought, conditions typically followed by a correction. This tug-of-war between potential breakthroughs and pullbacks makes timing the market particularly challenging. The rewards, on the other hand, could be substantial. Silver's dual role as both a precious and an industrial metal places it at the heart of several key trends. Its importance in green technologies, which are expected to see increased demand over the coming years, adds a fundamental support to its price. Additionally, in an environment where inflation remains high and central banks start to cut rates, silver could see further upside as investors seek hedges against inflation and currency devaluation. Thus, for those considering an investment in silver, patience and careful market analysis are paramount. It might be prudent to consider strategies that mitigate risk, such as dollar cost averaging or setting stop-loss orders to manage potential downside effectively. In conclusion, while the allure of high returns from silver is undeniable, especially with predictions of it reaching over $500 an ounce, investors must carefully weigh these opportunities against the potential for significant volatility and market corrections. As we contemplate the potential surge in silver prices, it's essential for investors to strategize their approach wisely. With the current market conditions and forecasts suggesting a significant upside, here are some strategies that could be considered to maximize gains while managing risks effectively. First, diversification remains a key principle. While silver presents an attractive opportunity, incorporating it as part of a broader investment portfolio can help mitigate risks. This could include balancing silver holdings with other assets like stocks, bonds, or other commodities, which may behave differently under various economic conditions. For those more inclined towards active investment, trading on technical indicators can be a viable strategy. Given silver's volatility, understanding and using technical analysis to identify buy and sell signals could be crucial. For example, monitoring resistance levels and RSI readings can help in making informed decisions about entry and exit points. Another approach could be the long-term buy and hold strategy, especially for those who believe in the long-term fundamentals driving silver prices higher, such as its role in green technologies and as a hedge against inflation. This strategy requires patience and a willingness to ride out market volatility with an eye on long-term gains. Moreover, for those looking for additional leverage or hedging options, considering silver futures or options might be a route to explore. These instruments allow investors to potentially amplify their returns, but come with higher risk, so thorough understanding and cautious handling are imperative. Lastly, staying informed cannot be overstressed. The silver market, like all financial markets, is dynamic and influenced by a myriad of factors. Regularly updating one's knowledge on market trends, economic indicators, and geopolitical events that could affect silver prices is vital for making timely and effective investment decisions. In summary, while the potential for David Hunter's prediction of silver reaching over $500 makes it an enticing investment, employing a strategic and well-informed approach is crucial. Whether it's through diversified holdings, technical trading, long-term investment, or leveraging derivatives, each strategy should be tailored to individual risk tolerance and investment goals. In wrapping up our exploration of silver's potential ascent to over $500, let's revisit David Hunter's bold forecast in the context of the current economic and market dynamics. Hunter predicts a melt-up scenario where various factors coalesce to propel silver to unprecedented heights. This isn't just speculation, it's rooted in a detailed analysis of macroeconomic trends, market psychology, and silver's unique position as both an investment and industrial commodity. Silver's journey to $500 would likely be driven by a combination of a weakening dollar, escalating industrial demand, particularly from green technologies, and inflationary pressures. These elements suggest a bullish outlook for silver, aligning with Hunter's views that a global bust could redirect substantial capital towards precious metals, offering them a safe haven status. However, such a scenario also hinges on broader economic shifts, including potential rate cuts by central banks in response to a slowing global economy, which could further diminish the dollar's appeal and boost silver's attractiveness as an alternative asset. Investors considering this path should remember, while the potential for significant returns exists, so does the risk of volatility and sharp corrections. The key will be in strategic entry and exit points, vigilant monitoring of market signals, and a readiness to adjust positions in response to new economic data. As we conclude, remember that while investing in silver, or any commodity, carries inherent risks, the rewards in this case could be historic, given the confluence of factors supporting Hunter's forecast. For those who choose to invest, maintaining a balanced and well-researched approach will be crucial. And finally, as always, nothing here constitutes financial advice. Make sure to do your due diligence and consult with a financial advisor to tailor your investment strategies to your personal financial situation. Don't forget to subscribe to our channel for more insights into commodity investments and hit the like button if you found today's discussion enlightening. Stay tuned for more updates, and thank you for watching.